Is the US government going to default on their debt? This is the talk of the town lately, and whether or not Congress is going to increase the debt ceiling in order for the US government to keep paying out benefits, salaries, and keeping up with all their debt obligations. The problem is there's a lot of uncertainty as to what's going to happen. The fact that the government could potentially default on the debt is something that's never happened before. However, until they decide on how they're going to attack this problem, a lot of people have questions, and if you're thinking about purchasing a home, you bet this is going to affect the housing industry. My name is Uyehara. I'm a sales manager with Loan Depot, helping you finance your homes all across America. And if this is the first time you're checking out my channel, make sure to subscribe and check the description below for more tips on how to get your mortgage right. One of the main issues that comes up with this whole debt ceiling is how many people rely on the government for financial assistance. According to CNBC, they mentioned that there's about 50 million people that could be affected that receive Social Security benefits. Not to mention our military, who also receive benefits, and all those that receive Medicare. That is by far a significant amount of people that could be impacted directly if the debt ceiling doesn't get increased. Now, if you're thinking about getting a mortgage and you rely on Social Security or some of these benefits that I just mentioned, you bet that's going to affect your loan application. So if you're thinking about purchasing or refinancing and you heavily rely on some sort of government assistance to pay your bills, make sure to communicate with your loan officer so that way we know how to structure your loan and give you the best advice while we figure out how to navigate these waters. Another issue that could impact the housing market is going to be interest rates. If the government defaults on the debt, interest rates are going to go up. Not just in mortgages, but you're gonna probably see it on credit cards and car loans as well. Now, if you're in the middle of a purchase or a refinance, I would strongly suggest locking in your interest rate sooner than later. This week could lead to a very volatile market, which more often than not is gonna lead to higher interest rates. We don't know how high that jump is gonna be. It could be 1/4%, could be 0.5%. No one knows. But in the 15 years that I've been doing loans, I would always err on the side of caution. Lock in your rate, take that lower rate today before you see any market volatility. Now, if you're on the fence and you're looking to purchase, remember the higher the interest rate goes, the lower your potential buying power can be. Now, there are ways to offset that, but more often than not, most people aren't gonna wanna throw a ton of cash towards a down payment, especially if you're a first-time home buyer. So again, this is another reason why if you're thinking about buying, make sure to talk to a loan officer, talk about getting pre-approved and run the numbers. Because when situations like this arise, there's a lot that's gonna be out of our control, and we're gonna have to react to how the market shifts depending on how the news breaks at any given day. And here's another thing to think about too regarding the housing market. If loans get tougher to qualify for in terms of income, especially if you're on fixed income or you're receiving any sort of government assistance, you may think twice about selling your property, because if you do sell your home and you don't have enough cash to purchase the next property, how are you going to purchase your next home? It might be a lot more difficult for you to purchase if there's any sort of government shutdown and if you're that borrower who is not receiving any sort of income from the government. And another thing to keep in mind, if there's less people selling homes, that means the inventory could potentially shrink, which means there's less homes for sale, more competition for buyers, and it could potentially lead to more bidding wars if there's less inventory on the market because people are hesitant to sell because they don't know how they would qualify for the loan or the impact it's going to have on them purchasing that next property. Now, I know there's going to be a lot of what-if scenarios, and we don't know how this is all going to play out. However, if you think you might be impacted by this, whether it be a purchase or a refinance, make sure to click the link in the description below so you can schedule a call with me, and I'd be happy to walk through your scenario and see how we can best set you up for success, whether it be a purchase or a refinance. Thanks for watching. My name is Uyehara, helping you finance your homes all across America, and I'll see you on the next one.